Recently, Syfe had just launched another new portfolio called Income Plus. And as the name suggests, this portfolio aims to provide investors with regular passive income. So in this video, I'll be reviewing everything you need to know about Syfe Income Plus. What is it? How it works? What are the fees? Minimum investment like? And so on. But more importantly, I will also be discussing whether is it better than other similar investments out there like SSBs, T-bills, and fixed deposits. So without further ado, let's jump right in. Okay, what exactly is Syfe Income Plus? On their website, Syfe proudly mentions that this portfolio is powered by PIMCO. Huh? What's PIMCO? Can eat one nah? Basically, PIMCO is an investment management firm, which is similar to institutions like Vanguard and BlackRock. So the word powered by PIMCO just means that Income Plus portfolios consist of PIMCO funds. But why PIMCO funds instead of normal ETFs? 3 benefits here. 1. PIMCO focuses on active management because they believe that by actively managing the investments, they are able to outperform the benchmark. 2. Tax efficiency. The PIMCO funds that are used in the portfolios are all domiciled in Ireland. This means that there's only a 15% withholding tax on dividends, compared to a normal US domiciled ETFs, which will have a much higher 30% dividend withholding tax. So, you get to save on taxes here. And 3. The funds are SGD hedged, so investors will avoid currency risk. This is important for investors who are looking to receive a stable monthly income, because if there's no hedge, it will result in a volatile SGD dividend payouts. The 2 portfolios that you can choose from are Income Plus Preserve and Income Plus Enhance. Let's start with Income Plus Preserve first. This portfolio focuses on steady income with capital preservation, or in simple English, it just means lower risk, lower return. This portfolio has an estimated monthly payout of 4 to 4.5% per annum. Estimated, yeah, not guaranteed, yeah. As for the portfolio holdings, as mentioned earlier, all of them are PIMCO funds. But instead of looking at the funds, it's better to look at the sectors to see how risky it is. 13.5% of the holdings are US government-related bonds, stuff like your treasury bills. 28% of the holdings are in securitized bonds. Securitized bonds are securities that are constructed from pools of assets to make up a new security. For example, mortgage loans, car loans, and student loans. 10.4% in investment-grade bonds, 25% in non-USD developed market bonds, and the remaining 12.4% are bonds from emerging markets. The average yield to maturity of the bonds here is 6.44%. It just means what investors will receive if they hold the bond funds all the way to maturity, and if there's no bonds that boom and die. But it's actually better to look at the monthly payout, which is 4 to 4.5% per annum, because this is the actual dividend payout that investors can expect to receive after deducting all the fund management fees. This portfolio has an average of A+ for credit rating, which is still considered a good rating, and the beta or the correlation to the S&P 500 is quite low at just 0.12. So Syfe gave this portfolio a low risk rating. Next, Income Plus Enhance. This portfolio gives a high income with capital appreciation, or in other words, slightly higher risk, slightly higher return. This portfolio has an estimated monthly payout of 5 to 6%. 25% of the holdings are in US government-related bonds, 14% securitized, 16% investment-grade bonds, 14% high-yield bonds, and 32% in emerging markets. The yield to maturity is slightly higher at 8.22%. Credit quality is slightly lower at A-, but is still in the upper medium grade quality. The beta or the correlation to the S&P 500 is slightly higher at 0.22. So Syfe gives it a slightly higher risk rating. So those are the 2 Income Plus portfolios that you can choose from. Next, the minimum initial investment amount for Income Plus portfolios is $5,000. $5,000 is considered a lot, as most of the other robo-advisors only require you to invest $1,000 or less. The reason Syfe Income Plus minimum initial investment is so high is so that the monthly dividend amounts are not too small for Syfe to process. So if the portfolio value is more than 5k, you can choose to receive the money payout straight to your bank account or reinvest the money back into the portfolio to activate the magic of compounding. But if the portfolio value is less than 5k, Syfe will just reinvest the dividends for you. Good news, Webull has decided to extend the super generous promotion by another month. By just funding any amount into Webull and maintaining the funds in the account for 30 days, you will get 5 free shares worth up to $500. But wait, that's not all. This time, you will also get a chance to win a Tesla Model 3. So, it's getting super exciting, yeah? Besides the awesome sign-up gifts, Webull also has some super attractive features, like the Money Bull, which lets you earn up to 4+% interest on your idle funds, in-depth analysis tools, free market data, and a global community. So, if you still have not signed up to Webull yet, chop quickly sign up for it using my link down below, because this super generous deal will not last long. With that being said, let's get back to the video. Next, let's talk about the fees. For Income Plus Preserve, the average fund level fee is 0.97%, and for Income Plus Enhanced, it is 0.83%. Then, there's also the trailer fee rebate. Trailer fee is the fee that the fund manager pays to the fund distributor, in this case, Syfe, for helping them to sell the funds. So, rather than taking the fees, Syfe just rebates the fee back to investors. Good job, Syfe! After the rebate, Income Plus Preserve net fund level fee is just 0.68%, and Income Plus Enhanced net fund level fee is 0.65%. But wait, that's not all, because Syfe also charges a management fee. Depending on the investment amount, the fee ranges from 0.35% to 0.65%. Someone on Reddit mentioned that you are able to invest in the same funds at Endowers. So I reconstructed the same portfolios at Endowers, and this is what I found. For the Income Plus Preserve portfolio on Syfe, it is 0.68% net fund level fee after deducting the trailer fee rebate, and on Endowers, it is 0.53%. So it does seem like Endowers is cheaper. But we also need to add in the platform management fee. You can see that at different amounts, sometimes it's Syfe that's cheaper, sometimes it's Endowers. For example, if you are investing less than 100k, Endowers is cheaper at 1.13%. As for the enhanced portfolio, the fund level fee is slightly cheaper at Syfe at 0.65% versus Endowers 0.67%, which is just a very tiny difference. Then, if you add in the management fee, the difference in net fee is also very small. However, you also need to remember that Syfe helps you to optimize the portfolio every now and then, while Endowers doesn't. So that's why if you want to invest in the Income Plus portfolio, it's still better to stick with Syfe, given that the difference in fees is very small. So how does Syfe help you optimize the portfolio? Syfe will first receive portfolio recommendations by PIMCO's forward-looking views on the market. Syfe will then make these recommendations to clients on a semi-annual basis, and you can then choose to either accept the recommendations or not. Besides that, Syfe may also automatically rebalance the portfolio on a periodic basis if the portfolios are out of alignment with the target allocation. Now, we come to the most important part. Is Income Plus worth using? If you look at Syfe's comparison table, it seems like Income Plus is more attractive when compared to fixed deposits and Singapore savings bonds. Like Income Plus has a money payout frequency, flexible term, shorter withdrawal time, and no withdrawal penalty. But you also need to read between the lines. So here's my comparison table instead. I'm comparing Syfe Income Plus portfolios to other investments which give very similar returns. Let's go through them. In terms of yield, while Syfe Income Plus portfolios give an attractive 4 to 6% yield, you also need to include the platform management fee. Let's talk about Syfe Income Plus Preserve first. After the fee, Syfe Income Plus Preserve will give a net yield of 3.35% to 4.15%, which is very similar to other investments like Syfe Cash Plus, broker cash management accounts, fixed deposits, T-bills, and even high-yield savings accounts like OCBC, 360, and UOB1. However, you also need to remember that Syfe Income Plus is an investment and not a savings account, yeah? Meaning the capital is non-guaranteed and there's a risk of losing money by investing in them. So how much can you expect to lose? I couldn't find the data from Syfe, but I was able to get it from Endowers. The biggest drawdown that this portfolio has experienced within 1 year is negative 13.74%, which is a lot. But of course, when times are good, the best 1-year return that this portfolio has gotten was 25%. So is this portfolio worth investing in? To answer that, we need to take a step back and think about why we are investing in the Income Plus Preserve portfolio. Is to receive steady income while preserving capital rights, or in other words, we want to lose as little money as possible while receiving a consistent income. In that case, it's actually better to go with safer investments like fixed deposits, SSBs, T-bills and savings accounts, where the yield is almost the same and more importantly, the capital is guaranteed. Then, what about Syfe Income Plus Enhanced? The net yield after the fees is 4.35% to 5.65%, which is very similar to the Endowers Stable Income Portfolio's net yield. However, Syfe Income Plus Enhanced invests in slightly higher risk funds because the worst to best 1-year return is a lot larger as compared to Endowers Stable Income. So, is Syfe Income Plus Enhanced portfolio worth investing in? There are two possible reasons for investing in this portfolio. One, you want a higher yield of 4.35% to 5.65% per annum, and you don't mind the short-term fluctuations because historically, this portfolio has gone up over the long term and has given about 4.78% annualized return since inception. Second reason, you want to do a turnaround play when interest rates finally start to drop. As of now, many people believe that we are near peak interest rate already, and the Fed may start lowering rates after that. So when rates go down, the value of the bond will go up, and that's when the Income Plus portfolio value should go up. Should not guaranteed Finally, let's talk about the sign-up promotions. If you sign up with my link down below, you'll get a free waiver up to a cap of 50k for the first 3 months. And for Syfe Trade, if you deposit 2k or more and make one buy trade, you will earn a $20 cash credit. So that's my review of Syfe Income Plus. But what do you think about the portfolio? Will you be investing in it? Do comment down below and let me know. Or if you have any questions, you can also join my fast-growing Telegram group and ask any questions that you may have. Like, share and subscribe as I'll be posting new videos every Monday, Wednesday and Friday.